Hey everybody, it's Mark Huntington with the Huntington Group, and today we're bringing you some economic news. Unless you've been living on the planet Mars, you've heard about this rate adjustment here where it appears that the more creditworthy people are having to subsidize the lower credit people. So we wanted to, we've heard a lot about this, a lot of opinions flying around about this, a lot of, myth, rumor, whatever. So I kind of wanted to get to the bottom of it. So to do that, I brought in an expert. He is a lender that's been in business for over 20 years, super high capable and very much an expert in this field. So he is going to dig into this and help us understand this. His name is Matt Barrett. He's with Intercap Lending. Hello, Matt.
Hey, everybody.
Thanks for joining us.
Thank you for having me. So yeah, there's a lot of information out there. A lot of social media information, especially talking about these loan level price adjustments or changes to loan level price adjustments that Fannie and Freddie have. So what is a LLPA, or loan level price adjustment? It is a fee to the buyer, and these fees are meant to absorb risk, right? The loan level price adjustments or fees on an investment property loan are going to be different than on an owner occupied loan. So that's an example. And these fees are They depend on credit score, loan to value, occupancy, property type. Imagine it, or analogous to that would be, if you have a Prius and you've never had a speeding ticket, your insurance is going to be less than if you had a Lamborghini and you had a reckless driving ticket, right? It's all to absorb risk. So these changes are interesting because the Federal Housing Finance Agency, in their effort to help buyers buy homes in America, right? To help people that maybe have a smaller down payment or couldn't otherwise buy a house. They're trying to create an environment where that's possible or easier, right? Fair housing, affordable lending, it's kind of their mantra. So one way they're doing this now, which has some pluses and minuses, right? Some positive effects and negative effects, are changing these loan level price adjustments. So I'm going to zoom in on the screen here, and there's a heat map where you can see, visually how this will affect people. So the green color here is a reduction or a benefit, right? Reduction in fee, and the red is an increase in fee, and the orange over here, there's no change. So let's talk about a couple scenarios. Let's say someone's putting 40% down with a very large down payment. Doesn't really apply to a lot of people. They're putting 40% down. If their credit score is anywhere between 660 on up, there's no change. You can see that zero there. Let's say somebody is putting 15% down and they have a 755 credit score, right? We could just come across and it's almost like a times table chart, right? Go down the column on loan to value, go over on the credit score. Those fees got worse by 3/4 of a point. So what does that mean? That means on a $100,000 loan, that borrower is paying $750 more for their closing costs than they would have before. Let's go over to 3% down and a 780 credit score. So same thing on a $100,000 loan, that borrower is paying $625 less than they were paying before. So the money coming from these buyers is subsidizing the situation for these buyers. And that hurts some people and helps some people. Mark, what questions do you have?
So, I kind of do have that question. What is? Talk to us about the tipping point. Like, where does somebody cross over from being, receiving the benefit to paying the benefit?
Yeah, so you can see this on this heat map. So let's say somebody has. This is interesting, right? What if somebody had a 740 credit score before? Pretend that this wasn't in place already. Someone had a 740 credit score before, and they were putting 20% down. In this situation, it may be better to put 5% down, right? It's interesting, right? And you have to weigh out things like mortgage insurance or what your budget is, and can you afford a smaller down payment, or do you need to put a larger down payment down to keep your payment lower? So those are all things that we take a deep dive into when we're pre-approving somebody or structuring a loan to make sure that it's custom tailored for everybody. Every person has a different situation. Everyone's goals are different, everyone's budget is different, and we really take a customized approach to make sure that, whether or not these loan level price adjustments are adversely affecting somebody or benefiting somebody, we take a very, very customized approach to see how to mitigate or eliminate as many costs as possible.
So since this has been put in place or enacted, have you noticed big changes in the market? Have you seen any repercussions so far or unintended consequences?
I haven't. I mean, maybe some unintended consequences would be, this group of people paying a lot more for their mortgage, not over time, but as an upfront fee.
And that's it. So that's an upfront fee to these folks that are paying more on their mortgage. I mean, like right out of the gate, right out of their pocket.
Yep, a one-time upfront fee.
Right. Okay.
And that fee is subsidizing the fees that these folks were paying before.
So, what are your thoughts on that? Do you feel like that is going to be a healthy thing overall for the housing market and for the lending for consumers in general?
It depends on the consumer, right? I can't really, in my mind, I can't say that it would be healthy or a benefit for this group of borrowers, right? But it definitely is going to help somebody that is putting 5 or 3% down.
Mm-hmm. Okay. Yeah, it makes sense. Obviously, there's cost benefit there. Yeah, I guess I always wonder when government tries to start taking money from one person and giving it and spreading it out over to other people, what sort of unintended consequences you're going to eventually get. I guess we haven't had this in place long enough to actually know what those are going to be.
Correct. We haven't, this is brand new, and there's possibility this could be revised in the future, right? Maybe they retool it and change some of these things that would change this heat map on who's affected and the severity, good or bad, that they are affected.
So, okay, another big thing here then is obviously this is going to really affect and help maybe first-time home buyers or people trying to get into the housing market, especially with the market shifting into a little bit more of a buyer's market. Is that something that you're seeing? Are you seeing more people reaching out, or does this, I guess I should say, does this put more people in the threshold of being able to buy?
Definitely on the smaller down payment category of people. Would this help a first-time home buyer that's putting a small down payment down, or a subsequent home buyer that's putting a small down payment down? Would definitely help them. One thing to keep in mind, just economics 101, there is a housing shortage, right? Locally, nationally, there's no getting around that, and that's a hard ship to turn around, right? It's building new homes takes a very long time. It's not just erecting the structure. It's farmer sells to a developer. City council has to approve the zone change. It's a multi-year process where we just can't, it's impossible to have enough homes come online fast enough to flip this housing shortage around. So even though these costs are higher, which is unfortunate for some people, it's a benefit for others, and in my opinion, I don't think it's going to make or break the housing market because there's so much demand.
Yeah.
It would be really nice to, who knows what the administration will do, but it would be really nice to be able to retool this and have this as kind of this moving target to help people that need help and to mitigate or minimize the additional fees for others.
Okay. So as with most things, we will see if this is a healthy thing, if it has unintended consequences, or if it has unintended consequences to the upside, perhaps as well. It may really stimulate the newer and lower buyers, and that could help because one of the things we're having trouble with right now is inventory, because folks have the perception that they're going to get whacked if they sell their house. Not as many people have been listing, which means the inventory has still been tighter, and buyers really are a few more options and a little bit more negotiating power, but overall there really is still a shortage fundamentally. One last question. one of the things you hear, this is Biden's plan and Biden's, whatever. Take it. What's your attitude? What's your answer to that?
I mean, back in 2008, right, Fannie and Freddie had to be bailed out by the U.S. government, by the taxpayer. And ever since that occurred, the Federal Housing Finance Agency has had oversight over Fannie and Freddie. So this FHFA, very different than FHA, right? The Federal Housing Finance Agency are really the rule makers, and they're the ones conducting the oversight and putting these policies in place. So I don't know if it's something where one individual's came up with this idea.
Yeah,
it's this agency.
It's a broad. There's no one culprit then, I guess. All right. Well, listen. So if you want to get a hold of Matt, if you have more questions about these loan programs or any other programs, find his information in the comment section below. Matt, is there anything that you want to tell us, on an ending note about the health of the market, about financing, or even just about the services that you guys offer at Intercap?
Absolutely. Yeah, I've been doing this, as Mark said, for over 20 years at a high level. I love helping people solve problems and get into homes and coming up with solutions that maybe others wouldn't. So if you want to take a deeper dive into this or anything else, I'm all yours.
Yep, thank you so much. And I have seen Matt work miracles in circumstances where other lenders have fumbled. So definitely get a hold of him again, and like and share this video so that you can also subscribe, of course, so you can keep up to date with the home tours and new economic news. Thanks for watching, everybody. We'll see you next time.
Thanks, everybody.